What if I told you that the best insurance policy you could buy right now costs less than a tank of gas? Not life insurance, not health insurance, not even car insurance. I'm talking about something that's protected wealth for over 5,000 years, something that central banks are hoarding at record levels, and something that most Americans have completely overlooked while they watch their retirement accounts get decimated by inflation. Silver. Physical silver. And here's what nobody's telling you about why it might be the single most important financial decision you make this year. Let me paint you a picture of what's happening right now in the precious metals market, because what you're about to hear is going to challenge everything you thought you knew about protecting your wealth. While everyone's been focused on gold hitting new all-time highs, silver has been quietly setting up for what could be the most explosive move we've seen in decades. And the best part? You can still get in for pocket change compared to gold. Think about this for a second. When was the last time you could buy real, tangible insurance against economic chaos for less than the cost of dinner for two? That's exactly what silver represents right now. But here's where it gets interesting. This isn't just about having a shiny metal sitting in your safe. This is about understanding a fundamental shift that's happening in the global financial system. A shift that the big institutions have already positioned themselves for, while everyday Americans are being left in the dark. You see, there's this ratio that professional traders watch religiously. It's called the gold to silver ratio, and it tells you how many ounces of silver it takes to buy 1 ounce of gold. Throughout history, this ratio has averaged somewhere around 15 to 1. That means 15 ounces of silver would buy you 1 ounce of gold. Makes sense, right? Silver is more abundant, so it should be cheaper. But here's where things get absolutely wild. Right now, that ratio has been hovering in ranges that are historically extreme. We're talking about levels that have only appeared a handful of times in the last century. And every single time it's reached these levels, what happened next was a massive correction that made early silver buyers very, very wealthy. Before we go any further, I want to make sure you have access to something I put together specifically for people watching this video. There's a free guide in the description below that shows the saving secrets thousands of American retirees are using right now to protect their hard-earned wealth. It's completely free, no strings attached, and it could be the difference between watching your purchasing power evaporate and actually preserving what you've worked your entire life to build. Grab that guide, then come right back because what I'm about to show you is going to blow your mind. Now, let's talk about why silver is different from every other investment you've ever considered. Gold is beautiful. Gold is prestigious. Gold has been the ultimate store of value for millennia. But silver? Silver is the workhorse of the precious metals world, and that's exactly why it's so incredibly undervalued right now. You see, gold is primarily a monetary metal. Central banks hold it. Wealthy individuals collect it. It sits in vaults. But silver is different. Silver is consumed, and that's the key word here, consumed. Over half of all silver mined every single year gets used up in industrial applications. We're talking about solar panels, electric vehicles, electronics, medical equipment, water purification, and thousands of other applications where there is literally no substitute. You can't make a solar panel without silver. You can't manufacture the circuit boards in your smartphone without silver. The green energy revolution that every government on the planet is pushing, it runs on silver. And here's the kicker. Unlike gold, which gets recycled and stays in the system, most of the silver used in these industrial applications is gone forever. It's used in such small quantities in each device that it's not economically viable to recover it. So every year, we're depleting the above-ground supply of silver while demand keeps climbing higher and higher. Let me give you some numbers that should make your jaw drop. The solar industry alone is projected to consume massive amounts of silver in the coming years as countries race to meet their renewable energy targets. Electric vehicles use significantly more silver than traditional cars. 5G infrastructure build-out requires silver. The electronics boom in developing nations requires silver. And all of this is happening while silver mine production has been essentially flat or declining. You don't need to be an economist to understand what happens when demand skyrockets and supply can't keep up. Prices go up, way up. But here's what really keeps me up at night, and what should have every American paying attention. The paper-silver market. You see, there are two silver markets operating simultaneously. There's the physical market, where real metal changes hands, and there's the paper market, where contracts and derivatives trade on exchanges like the COMEX. And the ratio between paper silver and physical silver is absolutely staggering. We're talking about hundreds of ounces of paper silver claims for every single ounce of physical silver that actually exists in the vaults. Think about that. It's like a bank that issued hundreds of deposit slips for every dollar they actually have in the vault. What happens when people start asking for their money? The system breaks. And we're starting to see the cracks. Industrial users are getting nervous. They're locking in long-term supply contracts. They're building their own stockpiles because they know that if there's a supply disruption, their entire production line shuts down. A car manufacturer can't build electric vehicles without silver. A solar panel company can't fulfill orders without silver. These aren't speculators. These are businesses that need physical metal, and they're willing to pay whatever it takes to secure their supply. That's real demand. That's the kind of demand that drives prices through the roof. Now, let's talk about something that most financial advisors will never tell you about, because frankly, most of them don't understand it themselves. The relationship between silver and inflation. Everyone knows that precious metals are supposed to be an inflation hedge, right? But silver is special. Silver is what I call the people's inflation hedge. Here's why. When inflation really starts to bite, when the cost of groceries doubles and gas prices go through the roof, average Americans can't afford to buy gold. Gold becomes a luxury item for the wealthy. But silver remains accessible. And that's when you see the real magic happen. Go back and study what happened in the late 70s and early 80s. Inflation was running rampant. The dollar was losing value by the day. People were scared. And they piled into silver. We saw silver go from single digits to nearly $50 an ounce in a matter of months. That's not a typo. $50. And that was in 1980 dollars. Adjusted for inflation, that would be well over $150 in today's money. Now, I'm not saying we're definitely going to see those levels again, but I am saying that the conditions we're seeing right now rhyme with that period in ways that should make every investor sit up and pay attention. Think about what's happening in the economy right now. We've got government spending at levels that would have been unthinkable just a few years ago. We've got a Federal Reserve that's trapped between fighting inflation and keeping the economy from collapsing. We've got geopolitical tensions that are reshaping global trade. We've got de-dollarization movements where countries are actively trying to move away from the US dollar as the world's reserve currency. And in the middle of all this chaos, we've got silver sitting there, undervalued, overlooked, and absolutely essential to the modern economy. Here's a story that perfectly illustrates what I'm talking about. There's a major silver mining company, one of the largest in the world, and their CEO gave an interview recently where he said something that should have made headlines but barely got any attention. He said that at current prices, many silver mines are barely profitable. Some are actually losing money. And when mines aren't profitable, what happens? They shut down. Production drops, supply tightens, and we're already seeing this happen. Major silver producing regions are reporting declining output. Exploration for new silver deposits has dropped dramatically because at these suppressed prices, it doesn't make economic sense to develop new mines. So we're setting up a situation where demand is exploding, supply is contracting, and prices are still historically cheap. That's not a red flag. That's a flashing neon sign. But let's bring this back to you, to your situation, to your retirement, to your family's financial security, because that's what this is really about. It's not about making a quick buck or timing the market perfectly. It's about insurance, real insurance, the kind of insurance that has worked for thousands of years, through every economic crisis, every currency collapse, every government default. When the Roman Empire debased their currency, silver held its value. When the Weimar Republic printed money into hyperinflation, silver held its value. When every fiat currency in history eventually went to zero, silver held its value. And here's the beautiful thing about silver as insurance. Unlike a traditional insurance policy where you pay premiums and hope you never have to use it, silver is insurance that you can actually use and benefit from, even if the worst case scenario never happens. If the economy stabilizes, if inflation comes down, if everything works out perfectly, you still own a tangible asset that has industrial demand, that has monetary value, that you can pass down to your children. You're not out the premium. You own something real. But if things go sideways, if we see the kind of economic turmoil that more and more experts are warning about, then that insurance policy you bought for less than $50 an ounce could be worth multiples of what you paid. That's asymmetric risk. That's the kind of opportunity that doesn't come around very often. Now, I want to address something that I know some of you are thinking. You're thinking, if silver is such a great opportunity, why isn't everyone buying it? Why isn't it all over the news? Why isn't your financial advisor calling you up and telling you to back up the truck? And that's actually a great question with a very revealing answer. The financial industry makes money on complexity. They make money on managed funds, on trading fees, on annual management charges. They can't make money on you buying physical silver and putting it in a safe. There's no recurring revenue stream. There's no management fee. You buy it, you own it, end of story. So there's no incentive for the mainstream financial industry to promote it. Plus, and this is important, silver doesn't fit the narrative that the powers that be want you to believe. They want you to believe that the dollar is strong, that inflation is transitory, that the economy is recovering, that everything is under control. Silver is a vote of no confidence in that narrative. When people buy silver, they're saying, I don't trust the system. I don't trust that my dollars will hold their value. I want something real, something tangible, something that can't be printed into existence by a central bank. And that's a message that makes the establishment very uncomfortable. But here's what the smart money is doing. Here's what the people who understand how the game is really played are doing. They're accumulating, quietly, steadily, without fanfare. You've got billionaire investors who are taking delivery of physical silver. You've got family offices that are allocating significant portions of their portfolios to precious metals. You've got sovereign wealth funds that are diversifying out of dollars and into hard assets. These aren't dumb people. These aren't conspiracy theorists. These are the most sophisticated investors in the world, and they're buying silver like their financial lives depend on it. And speaking of protecting your financial life, if you're sitting on retirement accounts, if you've got a 401k or an IRA with 6 figures or more, you need to understand something critical. Those accounts are denominated in dollars, paper dollars. And every time the government prints another $1 trillion, every time the Fed expands its balance sheet, every time inflation ticks up another notch, the purchasing power of those dollars erodes. It's not a maybe, it's not a possibility, it's a mathematical certainty. But there's a way to protect yourself, a way to get physical precious metals into your retirement account without triggering taxes or penalties. I put together a comprehensive guide on how gold IRAs work, and it's in the description below. It covers everything you need to know about moving a portion of your retirement savings into physical gold and silver, completely above board, completely legal, and completely protected from the kind of currency debasement we're seeing accelerate right now. If you've got $100,000 or more in retirement accounts, this could be the most important financial decision you make this decade. Now, let's talk about the supply side of this equation, because this is where things get really interesting. Silver doesn't come out of the ground by itself. Most silver is actually a byproduct of mining other metals like copper, lead, and zinc. That means silver production is tied to the economics of those base metals. When copper prices are low, copper mines shut down, and guess what? Silver production drops as a side effect. We're not in control of silver supply the way we might be with a pure silver mine. It's dependent on these other markets, which makes the supply situation even more precarious. And then there's the recycling issue. With gold, recycling is a huge part of the supply equation. People melt down old jewelry, old coins, and that gold comes back into the market. But with silver, because so much of it is used in tiny quantities in industrial applications, recycling rates are abysmal. We're talking about less than 20% of silver being recycled. The rest is just gone, scattered across landfills and old electronics, embedded in demolished buildings, lost forever. So every year, the above-ground supply of silver is actually shrinking while demand is growing. That's not a sustainable situation. Something has to give. Let me tell you about what happened in the physical silver market not too long ago. There was a moment when retail demand for silver coins and bars absolutely exploded. Dealers couldn't keep inventory. Premiums over spot price went through the roof. People were waiting weeks or even months for delivery. And this wasn't because the price of silver had skyrocketed. This was just from a surge in retail demand from regular people who decided they wanted to own physical silver. Now imagine what happens when institutional money starts flowing into the physical market. Imagine what happens when countries start adding silver to their strategic reserves. Imagine what happens when the paper market finally breaks. and people demand physical delivery. The supply simply isn't there to meet that kind of demand at anywhere near current prices. Here's another angle that most people completely miss. Silver is money, not in the abstract sense, not in the philosophical sense, in the legal constitutional sense. The U.S. Constitution specifically mentions silver as money. For most of American history, silver coins were the primary medium of exchange for everyday transactions. Your grandparents or great-grandparents used silver dimes, quarters, and half dollars, real silver, 90% pure, and those coins are still legal tender today, though obviously nobody in their right mind would spend them at face value when the silver content alone is worth many times more. But here's the point. Silver has a monetary history that's deeply embedded in human civilization. It's not some speculative asset that was invented last week. It's not a cryptocurrency that exists only in digital form. It's real, it's tangible, and it's been recognized as money for longer than any government or currency currently in existence. And that matters. Because when people lose faith in paper currencies, when they start to question whether their dollars will hold value, they don't turn to complex financial instruments. They turn to what has always worked. They turn to gold and silver. Now, let's talk about the elephant in the room, the price suppression. And yes, I know that sounds like conspiracy theory territory, but stay with me because the evidence is overwhelming. There have been multiple cases where major banks have been caught and fined for manipulating precious metals markets. Not alleged manipulation, proven manipulation. They've paid billions in fines. Traders have gone to jail. This isn't speculation. This is documented fact. And the manipulation always works in one direction, keeping prices suppressed. Why? Because rising gold and silver prices are a signal that something is wrong with the monetary system. They're a canary in the coal mine, and the powers that be have every incentive to keep that canary quiet. But here's the thing about price suppression. It can't last forever. Eventually, physical demand overwhelms the paper games. Eventually, the real world asserts itself. And when that happens, the snapback is violent. We've seen it before. We'll see it again. And the people who positioned themselves beforehand, who bought physical silver when it was cheap and available, those are the people who benefit when the dam finally breaks. Think about silver like a coiled spring. The more it gets compressed, the more energy builds up. And right now, that spring is compressed about as tight as I've ever seen it. You've got industrial demand at record levels. You've got supply constraints. You've got a paper market that's over-leveraged to an absurd degree. You've got inflation concerns. You've got geopolitical instability. You've got de-dollarization. Every single fundamental factor is pointing in the same direction. Higher prices. Significantly higher prices. The only question is timing. And that's why the strategy isn't to try to time the market perfectly. The strategy is to accumulate physical silver while it's still cheap and available, and then wait for the inevitable revaluation. Here's what I want you to understand. This isn't about getting rich quick. This isn't about making a fortune overnight. This is about protecting what you already have. It's about making sure that the money you've worked your entire life to save doesn't evaporate in a cloud of inflation and currency debasement. It's about having a plan B when plan A is looking increasingly shaky. And the beautiful thing about silver is that it gives you that protection at a price point that's accessible to almost everyone. You don't need to be wealthy to buy silver. You don't need to have a huge investment portfolio. You can start with a few ounces. You can dollar cost average, buying a little bit every month. You can build your position over time. And every ounce you own is one more ounce of insurance against the economic chaos that seems to be accelerating all around us. It's one more ounce that can't be inflated away. One more ounce that doesn't depend on any government's promises or any central bank's policies. It's yours, it's real, and it's been valuable for 5,000 years. Let me share one more historical parallel that I think is incredibly relevant to where we are right now. In the years leading up to the 2008 financial crisis, there were warning signs everywhere. Housing prices were detached from reality. Debt levels were unsustainable. The financial system was over-leveraged, but most people didn't see it coming. Or if they saw it, they didn't act on it. They assumed that the authorities had everything under control, that the system was too big to fail, that someone somewhere was making sure everything would be okay. And then it all came crashing down. And the people who had prepared, who had moved some of their wealth into hard assets, who had bought gold and silver when everyone else was chasing stocks and real estate. Those people not only survived, they thrived. We're seeing similar warning signs now. Actually, we're seeing worse warning signs. The debt levels are higher. The money printing is more extreme. The geopolitical situation is more unstable. The wealth gap is wider. The social fabric is more frayed. And yet most people are sleepwalking through it, assuming that somehow, some way, everything will work out fine. Maybe it will. Maybe the central banks will pull off a miracle. Maybe we'll have a soft landing. Maybe inflation will magically disappear without causing a recession. Maybe. But what if it doesn't? What if this time really is different? What if the can can't be kicked down the road anymore? That's why silver is insurance. Because you're not betting that disaster will strike. You're preparing for the possibility. You're acknowledging that the future is uncertain, and that having some of your wealth in a form that has survived every economic crisis in human history is probably a smart move. And the fact that you can get that insurance for less than the cost of a nice dinner, that's not a burden. That's a gift. That's an opportunity that won't last forever. Here's what I want you to do. I want you to think about your financial situation. Think about how much of your wealth is tied up in paper assets. Stocks, bonds, cash in the bank, retirement accounts, all denominated in dollars, all dependent on the system continuing to function smoothly. And then ask yourself, what percentage of my wealth would I be comfortable having in physical precious metals as insurance against that system breaking down? For some people, it might be 5%. For others, it might be 20 or 30%. There's no right answer. It depends on your situation, your risk tolerance, your view of where the economy is headed. But here's what I can tell you with absolute certainty. Having 0% in precious metals, having no physical silver or gold at all, that's not a neutral position. That's a bet. You're betting that the dollar will hold its value. You're betting that inflation will stay under control. You're betting that the financial system is stable. You're betting that governments and central banks know what they're doing and have your best interests at heart. And maybe that bet will pay off, but it's still a bet. And it's a bet where you have everything to lose and nothing to gain. Compare that to owning some physical silver. If everything works out great, you still own a valuable asset that you can sell or pass down to your kids. You're not out anything except the opportunity cost of having that money in something else. But if things go sideways, if we see serious inflation or currency problems or economic turmoil, then that silver could be worth many times what you paid for it. That's asymmetric risk. That's the kind of trade that professional investors dream about. Unlimited upside, limited downside. And here's the final piece of the puzzle that ties everything together. Silver is scarce. Not in the way that gold is scarce, where there's a certain amount in the world and it mostly just sits in vaults. Silver is scarce in a much more urgent way. It's being consumed. It's being used up. And the rate of consumption is accelerating while the rate of production is stagnating or declining. That's a recipe for a supply crisis. And when that crisis hits, when industrial users are competing with investors for a limited supply of physical metal, prices are going to do things that will shock people who aren't paying attention. The smart move is to position yourself before that happens. The smart move is to accumulate physical silver while it's still available at reasonable prices. The smart move is to treat it as insurance, as a core holding, as something you buy and hold for the long term. Not as a trading vehicle, not as something you're trying to flip for a quick profit, but as a fundamental part of a diversified, resilient financial strategy. So here's my challenge to you. Don't take my word for any of this. Do your own research. Look at the supply and demand fundamentals. Look at the historical price patterns. Look at what the smart money is doing. Look at the geopolitical and economic trends, and then make your own decision. But make it an informed decision. Make it a conscious choice rather than a default position of doing nothing. And for those of you who've made it this far, who've stuck with me through this entire analysis, I want to make sure you have every resource you need to take action. That free guide I mentioned earlier, the one in the description, it's not just about understanding the market. It's about practical steps you can take right now to protect your wealth. And here's something special for people who watch all the way to the end. If you're an American retiree with at least $100,000 in any retirement account, and you mention that you watch this video, you'll get access to an exclusive one-on-one educational web conference. No obligation, no pressure, just a chance to talk with someone who can walk you through your specific situation and help you understand your options. That's only available to people who mention this video, and it's completely free. The bottom line is this: silver is the best insurance you can buy for under $50. It's accessible, it's tangible, it's historically proven, and it's setting up for what could be one of the most significant price moves we've seen in our lifetimes. The question isn't whether you should own some. The question is how much and how soon can you get started? Because every day you wait is another day that the fundamentals get tighter, the supply gets scarcer, and the risk of being priced out gets higher. The opportunity is here, the information is here. The only thing missing is your decision to act. Make it count.